when it comes to filing your income tax returns. The sooner you do it, the better it is. For instance, last month, the Income Tax Department issued an advisory through its official Twitter handle alerting tax filers about delays on the income tax portal. Now, if such delays persist, you could well miss the deadline. You could file your returns, of course, after the due date as well, but then penalties and interest start kicking in. In fact, interest kicks in as soon as the financial year for which you pay your taxes gets done. Now, according to Section 139 of the Income Tax Act 1961, the due date for filing of tax returns is 31st July of the relevant assessment year for all assessees other than a company, a person whose accounts are required to be audited, and a few others specified in the section. So for most individuals who had income from salaries, small businesses and professionals, the due date to file ITRs for financial year 2021 to 22 is 31st July 2022. Although the deadline for filing ITRs is 31st July, one can still file returns till 31st December of the assessment year. But this is called a belated return. And of course, there are penalties to be paid in addition to interest. Belated returns can be filed at any time up to 3 months before the end of the assessment year or before completion of assessment, whichever is earlier. A belated return for 2021 to 22 can be filed till 31st December 2022. That is, 3 months before the assessment year 22-23 ends on the 31st of March 2023. However, filing a regular return and a belated return are not the same. A 5,000 rupees penalty will be charged for delay in filing of returns if the total income to be reported exceeds 5 lakh rupees. Now, if the total income of the person is less than 5 lakhs, then the fee payable is up to 1,000 rupees. Now, after 31st December of the assessment year, one cannot voluntarily file ITRs in case you missed that deadline also. After that deadline, if and when the Income Tax Department picks up your income and tax details available for scrutiny, it will tell you what you need to do. Not only does the delay in filing your tax returns attract a penalty, you also have to pay penal interest if income taxes are due from your end. Section 234 of the Income Tax Act deals with penal interest that is levied for delays in paying taxes on time. Your interest penalty clock starts to tick from the first installment of advance tax. Advance taxes based on annual income projections are supposed to be paid in 4 installments: 15 June, 15 September, 15 December and 15th March. Now, according to Section 234C, if you fail to pay your advance taxes on time, you will need to pay a 1% penalty every month or part thereof on income taxes due till you pay out or till the end of the financial year. Once the financial year in which you earn your income, 2021-22 at present, once that gets over, you need to start preparing your income tax returns to be paid by 31st July. Also, if you've not paid 90% of the advance tax due by 31st March of the financial year, the penal interest clock starts ticking under Section 234B from 1st April onwards. That is why tax experts say it's always better to file your return as soon as the assessment year begins, 1st of April in our case, and not wait till the last minute, 31st of July in this case. Depending on when you file your tax returns between 1st of April and 31st of July of the assessment year, you need to pay 1% interest on your tax dues per month or part thereof as per Section 234B. If you fail to file your return and pay the due taxes by the deadline, which is 31st July, then you have the chance to file a belated tax return by 31st December, like I flagged off, of that particular assessment year. Besides penalty and interest, there are other disadvantages of filing a belated return. In case of filing a belated return, if the assessee is eligible for a refund, then no interest is given on the refundable amount. In other words, there's a price to pay for a belated return even if eligible for a refund. When one files a belated return, losses cannot be carried forward. Now, this effectively means that no loss under the head capital gain or business and profession can be carried forward or set off from succeeding years if you do not file your returns on time. Also, in case an assessee fails to file the belated return, then a taxpayer can receive a notice of inquiry according to experts. Given so many disadvantages of missing the due date, I'm sure you all agree that it's better to file the return on time. Of course, now that we have less than a week left, guys, let's get going in case you haven't done it already. But before you do that, don't forget to like, subscribe and share the video.